What if the reason you keep losing money in crypto isn't because you're unlucky, but because you're trading against machines that already know what you're about to do? Not humans. Not hedge funds. Machines. Right now, while millions of retail traders stare at charts, scroll through Twitter, and panic buy green candles, artificial intelligence systems are quietly scanning the entire market in milliseconds. They don't sleep. They don't feel fear. They don't revenge trade after losses. And some of them can react faster than the human brain can even process information. A trader wakes up in the morning thinking he found the perfect opportunity. But before he even clicks buy, an AI system may have already predicted the move, entered the trade, and taken profit before he realizes what happened. And the craziest part? Most people still think they're competing against other beginners. They're not. They're competing against algorithms trained on years of market psychology, billions of data points, and real-time behavioral analysis. But here's where things get interesting. The rise of AI traders isn't just changing crypto. It's changing money itself. And by the end of this video, you'll understand why some people are building massive wealth in silence, while millions of others keep repeating the same losing cycle over and over again. For years, retail traders believed the market was simple. Buy low. Sell high. Follow trends. Watch influencers. Learn technical analysis. And eventually, you'll win. But if that's true, then why do most traders still lose money? Why do breakouts fail the moment everyone notices them? Why does the market suddenly reverse right after social media becomes bullish? Why do liquidation cascades always seem to hunt the exact price where retail traders place stop losses? At first, people blamed manipulation. Then whales. Then exchanges. But a new theory started spreading through trading circles. A theory that sounded almost paranoid. What if AI systems are learning human behavior so well that they can predict retail traders before retail traders even act? And if that's true, then the game most people think they're playing may already be over. Because this isn't just about smarter trading bots anymore. It's about a financial battlefield where machines evolve faster than humans can adapt. And the people making the biggest profits? They may not even be trading manually anymore. To understand how we got here, you have to go back to Wall Street. Long before crypto existed, major hedge funds were already using algorithmic trading systems. At first, these systems were simple. They followed rules. If a stock dropped to a certain level, buy. If volatility increased, sell. But over time, the systems became more advanced. Firms started feeding them massive amounts of historical market data. News headlines. Economic reports. Price patterns. Trading behavior. And eventually, machine learning entered the picture. Instead of simply following instructions, algorithms began adapting on their own. They started identifying patterns humans couldn't even see. Tiny correlations. Microsecond inefficiencies. Behavioral reactions. And slowly, the fastest firms began dominating the market. By the early 2010s, high-frequency trading firms were executing trades in fractions of a second. Some companies even spent hundreds of millions of dollars just to reduce trading latency by milliseconds. Because in modern markets, speed became power. Then crypto arrived. And unlike traditional finance, crypto never sleeps. No closing bell. No weekends. No centralized control. It was the perfect environment for AI-driven systems. Volatility was massive. Liquidity was fragmented. Retail traders flooded in by the millions. And most importantly, emotions were everywhere. Fear. Greed. Panic. Euphoria. Exactly the kind of behavior intelligent systems could exploit. At first, crypto trading bots were primitive. But then something changed. AI models became dramatically more powerful. Suddenly, systems could analyze sentiment from social media, track whale wallets in real time, interpret breaking news, predict volatility shifts, even detect emotional crowd behavior through trading patterns. And while most retail traders were still drawing lines on charts, AI systems were evolving into something far more dangerous. The biggest advantage AI traders have isn't speed. It's emotionlessness. Human beings are emotional creatures. And markets are emotional machines. That combination creates chaos. A trader sees Bitcoin pumping and feels FOMO. Another trader watches their portfolio crash and panic sells. Someone loses money, then doubles their position trying to recover losses. But AI doesn't care. It doesn't feel excitement. It doesn't fear red candles. It doesn't get greedy during bull runs. It simply reacts to probabilities. That alone changes everything. Because most losses in trading don't come from bad strategies. They come from bad decisions. A human trader might know the correct move and still fail to execute it. AI doesn't have that problem. But here's where things get even more unsettling. Modern AI systems don't just analyze markets. They analyze people. Every trade placed by retail investors creates behavioral data. Where people enter, where they panic, where they place stop losses, where they get liquidated. Over time, intelligent systems can begin identifying recurring psychological patterns. And once you can predict mass psychology, markets become less random. Think about that for a second. What if the market isn't chaotic anymore? What if it's increasingly becoming a prediction engine powered by machine learning? Suddenly, the average retail trader isn't competing against luck. They're competing against systems designed to exploit predictable human behavior. But the real twist isn't that AI traders exist. It's who's building them. Most people imagine secretive billion-dollar hedge funds controlling these systems. And yes, some of them do. But AI trading technology is no longer limited to Wall Street elites. Open-source AI models are exploding across the internet. Retail traders now have access to machine learning tools that once required entire teams of engineers. Small crypto funds are building autonomous trading agents. Developers are creating AI systems that scan blockchain transactions in real time. Some bots can identify momentum shifts before they appear on public charts. Others monitor social sentiment across thousands of posts every second. And then came AI agents. Not simple bots. Autonomous decision-making systems. Programs capable of analyzing information, adjusting strategies, and executing trades with minimal human input. Some analysts believe this could completely transform crypto markets within the next few years. Because eventually, AI systems may not just assist traders. They may replace them. And that changes the psychology of the market itself. Imagine millions of human traders reacting emotionally, while increasingly sophisticated AI systems anticipate every reaction. The machines don't need to win every trade. They only need to consistently outperform humans over time. And statistically, they already are. But here's the part almost nobody talks about. As more AI systems enter the market, they also begin competing against each other. Which creates a strange new reality. A financial ecosystem where algorithms battle algorithms, while humans struggle to keep up. So how are AI traders actually winning? The answer is surprisingly simple. Data. AI systems consume more information than humans possibly can. A retail trader might analyze one chart. An AI model can monitor thousands simultaneously. It can track volume spikes, liquidation zones, macroeconomic news, social sentiment, whale movements, funding rates, and on-chain data, all in real time. But information alone isn't enough. The real power comes from pattern recognition. Markets move in cycles because humans behave in cycles. Fear and greed repeat endlessly. And machine learning thrives on repetition. For example, an AI system may notice that whenever Bitcoin dominance rises while meme coin sentiment collapses and exchange inflows spike, a market correction usually follows within hours. A human might never notice that pattern. An AI model can detect it instantly. Now multiply that across millions of data relationships. This is why many professional firms no longer rely entirely on traditional analysts. AI can process complexity at a scale humans simply cannot. But here's where things get even more fascinating. Some AI trading systems are trained using reinforcement learning, meaning they improve through trial and error. They simulate thousands of strategies, identify what works, discard what fails, and continuously adapt. In other words, they evolve. And unlike humans, they can evolve every second. This creates an enormous advantage in crypto markets where conditions change rapidly. A strategy that worked 6 months ago may fail today. Human traders often adapt too slowly. AI systems can shift instantly. But there's another hidden advantage. Consistency. Humans are inconsistent. People break rules. They overtrade. They chase hype. They become overconfident after wins and emotional after losses. AI systems follow logic relentlessly. And over long periods of time, consistency compounds. That's why many institutions care less about making huge gains and more about reducing mistakes. Because avoiding catastrophic decisions is often more important than finding the perfect trade. And ironically, humans are usually the source of catastrophic decisions. Now combine all of this together. Speed. Emotionless execution. Massive data processing. Adaptive learning. Behavioral prediction. Consistency. Suddenly, it becomes clear why retail traders often feel like the market is rigged. In many ways, the playing field fundamentally changed. Most people just haven't realized it yet. But despite all the hype surrounding AI trading, there's a dangerous side most influencers ignore. AI systems are not magical money machines. And history proves that even the smartest algorithms can fail spectacularly. Financial markets are unpredictable by nature. Black swan events happen. Unexpected news breaks. Governments intervene. Liquidity disappears. And when algorithms malfunction, the damage can happen unbelievably fast. There have already been cases where automated trading systems triggered massive flash crashes within minutes. Because machines can amplify panic just as quickly as humans. And there's another problem. If too many AI systems begin using similar strategies, markets could become unstable. Imagine thousands of algorithms reacting to the same signal simultaneously. The result could create violent chain reactions. Some experts even fear future markets could become dominated by autonomous trading wars between competing AI systems. A world where humans barely understand why prices are moving anymore. But the biggest risk may actually be psychological. As AI trading becomes more accessible, millions of people may believe profits are automatic. That mindset is dangerous. Because markets punish overconfidence relentlessly. An AI tool in the hands of an undisciplined person can still lead to catastrophic losses. And despite all the advances in machine learning, no system can predict the future perfectly. Not even AI. Which means the greatest advantage may not come from blindly trusting machines, but from understanding how to work alongside them. For decades, people believed the future of finance would be built by bankers, traders, and institutions. But the future may belong to something else entirely. Intelligent systems. Algorithms. Autonomous agents making financial decisions faster than any human ever could. And whether people realize it or not, that future is already arriving. Right now, somewhere in the world, an AI trading system is scanning millions of data points, predicting market behavior, executing trades, learning, improving, evolving. While most retail traders are still reacting emotionally to headlines and candlestick patterns. But this story isn't really about technology. It's about adaptation. Every major financial shift in history created winners and losers. The people who adapted early often built enormous wealth. The people who ignored change usually got left behind. And today, another shift may already be happening. The rise of AI-driven markets could become one of the biggest transformations in financial history. Not because machines are perfect, but because human behavior is predictable. And in markets, predictability can be exploited. The question is no longer whether AI will influence trading. It already does. The real question is this. In a future where machines increasingly understand human psychology better than humans understand themselves, what happens to the people still trading like it's 2017? Thank you and subscribe now.